Thank you. The reason there's so many Paragon people here is if there are any difficult questions, hopefully they can answer them for me. I'm not sure I will be able to do that. Boy, we picked this topic and then I started thinking about it, and I'm thinking, wow, I'm hoping that I haven't put myself out here for a lot of abuse today. Banks and entrepreneurs, friends or foes. Let me see if I can step out of the way so everybody can see. Let me give you a little bit of an introduction to Paragon National Bank. If you don't already know, Paragon is a full-service community bank that we started in 2005, January of 2005. We're locally owned and operated to provide a high level of customer service. We have advanced technologies, basically the same kind of technologies that you would see at a much larger bank, a regional bank, or our national-focused bank. And we have 4 locations along what I love to call the Paragon Corridor. And actually, the Memphis Business Journal used this in an article one time. Instead of saying the Poplar Corridor, they called it the Paragon Corridor. And I thought, okay, I'm liking that. I'm going to use that. So 4 locations up and down Poplar. We have approximately $250 million in total assets. And our emphasis are really, I've got 4 areas here. Small businesses, business owners and executives, homeowners, and then nonprofit organizations. We do a lot with nonprofit organizations, and I can talk a little bit more about that. Our key to our success is our team, and I always say this, and I mean this, and I appreciate the support that the team that's here today is giving me. Our key to our success is our team, and they are our number 1 priority. Believe it or not, if we make them our number 1 priority, then they make our customers their number 1 priority. It works, and it's our business philosophy. 21 of our employees were with us when we opened in January 19th, 2005, and they are really entrepreneurs. They really started the bank, and so I'd like to think that we have a little of that entrepreneurial spirit at Paragon. So instead of being friend or foe, maybe we're part of the entrepreneurial group. 86% of our employees own stock in the bank, and so they have ownership in what we're doing. We had tellers invest their IRAs when we started the bank back in 2005, and so they have a vested interest in our success. 25% of Paragon is actually owned by our employees and our directors. So it's a nice percentage of the bank that is owned by our own people. And then even though we are 7 years old, our employees average 19 years of banking experience. So it's a veteran banking group that we have assimilated at Paragon. I'm going to come back to capital in a little bit. Organizers initially raised $23.2 million in capital from local investors when we started. And then that's still a record for capital raised in the Memphis area for a Memphis local bank. Then in 2006, we raised an additional $12.2 million. And it's good that we did this because just like other startup businesses, which is what we were, we had startup losses that we planned, and then we had unexpected losses because of the economic crisis. And our capital has let us get through that, I won't say with little difficulty, but we've gotten through the crisis because of the good capital levels that we had. In fact, and I'm about to get off Paragon, but these are our capital levels at March 31st and June 30th of this year. Over here on the right column is what is considered a well-capitalized bank. And you can see our capital ratios are significantly higher than a well-capitalized bank. So we've gotten through the startup losses and the economic crisis with very strong capital. And so we're excited about that. And I think that's been one of the keys to our success. In fact, we have some of the highest capital ratios of any of the Memphis-based banks at this point. And there is no, I know this may be a question you have in your mind, there is no government support in those capital numbers. There's no TARP or any other kind of numbers. Those are the real capital numbers. I want to talk briefly about the importance of small business, and we know it's important, and a lot of the other community banks that are represented here today know it's important. This is the share of net jobs created by firm size from 1993 to 2006, and this is from the U.S. Census Bureau. And you can see that 72% of the jobs have been created with firms that have less than 20 employees. And that's where we work really hard, is to work with those small businesses, and a lot of community banks do. These are the number of businesses in the U.S., and this comes from the Census Bureau also, by the number of employees that they have. I mean, so far, by far, the most number of businesses have less than 20 employees. This is less than 20 employees, 20 to 99, 100 to just under 500, and over 500. Now, if you look at total employees, these folks have a whole lot of employees. But if you look at number of businesses, which is one of our targets, there are, as you know, a huge number of small businesses. What I think we're talking about today is credit needs for entrepreneurs. And so that's kind of the way that I have directed this. And the first thing I was looking at is the life cycle of credit needs for a business. Because as a business starts up, it has certain needs, and it gets into a growth mode, and then it becomes mature. And there are different needs depending on the cycle that a business is in. And I've got some examples here. Startup, sometimes you see home equity lines of credit, credit cards and leasing, and I'll talk about some of those. And then as it matures, you get into a line of credit, revolving credit, term debt, and then mature larger businesses need commercial paper, alternative pricing, and ESOP financing. So it gets more sophisticated as a business gets older and larger. There are a lot of non-traditional financing options, and let me say these are all beyond the scope of what I'm talking about today. I'm really talking about bank loans, because these are things that, while we can do a little bit of some of these things, most of these are done by entities the size of traditional commercial bank. And that's what Paragon is, and I know there's representatives from Independent here and from Triumph here, and we're more of a traditional, all three are traditional community banks, commercial banks. I'm going to tell you the truth about startup business loans, and it's not all good. And so this is where, I still think we're friends, but traditional banks are not designed to take huge risks. Most banks have margins of between 3 and 4%, so really small margins. What we're able to do is leverage our size and make more income, but our margins are very small. As a result, we can't take big hits. And unfortunately, a vast majority of startups fail within the first few years. In fact, when we make a new loan, our loan loss provision, where we're like an allowance for loan losses that you see in almost any kind of business, is about 1.5% to 2%. So it's a very small percentage. And that tells you that we're not counting on taking large losses. Startup businesses are also, as you know, the hardest for a borrower to acquire. And banks don't have a great upside with startup loans. So a lot of times, we work with startups, but if the startup does great, we're excited about it, but we're just going to get our interest income. In other words, we're not really partners with the startup, and so that's just the reality of where it is. And as you know, startup business loans are typically more expensive. We make startup business loans at Paragon, and I feel sure that Independent, Triumph, and the other banks that represent here make them also. But there's things that we look for in a traditional bank. The first is liquid collateral, and that would be CDs or marketable securities. And I can tell you some stories where we've had some successes with startup businesses. We have a business that was started up, and we secured their loan for the first year with marketable securities, and they had a great business plan. They had an experienced group of operators, and that they got that business going, and they met their projections. Actually, they're exceeding their projections. And after a year, we were able to turn their line of credit into a more traditional line of credit with a borrowing base. But again, we had experienced operators, and we had the marketable securities to start us. I think they're going to do great, and hopefully we'll be partnering with them for a long time. The other thing we look for is cash flow from outside sources. We had a startup restaurant that we helped just recently. The guarantors also had a lot of outside income. They actually had another career that was both the husband and wife, where they were making a lot of money. And so they guaranteed the loan. And unfortunately, this business closed. And which it happens when you're doing startup businesses. And it closed. But because they have that outside source of income, they're going to pay the loan off. It's just it's a way that we can help startups and realize that if it's outside income, if something goes wrong, we've got a backup plan. And then finally, we also sometimes see new startups use home equity loans. I know of another startup restaurant here in town, and we helped them get started, and they used home equity loan. And they're now very successful and very popular in town. So there are ways that a traditional commercial bank can work with a startup. We just can't make a loan without cash flow and collateral is sufficient. I together some tips for finding a small business-friendly bank. And the first thing I would say is understand the trends in lending. And since all the banks represented here are community banks, I can tell you, according to the SBA website, community banks do more small business lending than larger banks. And I'll talk about that a little bit more later. But community banks typically are really interested in the small businesses. Community banks, let me tell you a little bit about them. They're typically locally owned. They provide typical banking products and services. They have less than $1 billion in assets. To me, $1 billion seems really large, but typically less than $1 billion in assets. They're involved in their local community. And at Paragon, for example, we are very involved in our local community. We are always out working with nonprofits. In fact, this is a list of the organizations that our employees are currently involved with. We encourage our employees to be out and be part of the community, part of the local community. Community banks are involved in their local community, and then they provide personalized service. Let me tell you a little bit about that. Community banks typically do not rely on a computer model to determine whether or not to make a loan. Most, the locally owned community banks are going to make a decision with local knowledge. They're going to understand local market conditions and circumstances surrounding each borrower and his or her enterprise and how they're different. I think that is a huge advantage. I used to work for a bank that was acquired by a much larger out-of-town bank. And most of those decisions all of a sudden became made by people out of town. And they didn't have a clue about who was in Memphis and what kind of history people had and what kind of expertise they had. So community banks, that's part of being personalized service. The other thing is we have relationship managers, not just loan officers. A lot of larger banks will have somebody go out and maybe make a call on a potential customer, maybe discuss a potential deal, and they'll bring it back and hand it off to somebody else instead of really understanding the business. Community banks typically consult with the customer on the best solution, prepare an analysis of the proposed transaction, and then present the proposal to local decision makers. So those are some of the advantages of community banks. So the second thing I would say is to seek out experienced lenders. And there are a lot of good community bank lenders in Memphis that would be interested in a startup business or small businesses. In our case, in a 2010 study conducted by the SBA, Paragon was ranked the 7th small business lender in the state of Tennessee and #1 in the city of Memphis. And so we've been recognized for the amount of small business lending that we've done. The third thing is to educate yourself in the fundamentals of the lending process. And there's too much information to talk about, and many of you have been through this process before. But this is just a list from the SBA of all of the loan application list, things that need to be prepared and presented to get a loan. I went out and was calling on a prospect day before yesterday. It was a 5th-generation business based here in Memphis, one of the older businesses in the city. He was looking for a very small loan, $200,000 loan. They are a very strong company, and he was blown away by the amount of documentation that was required to do a loan. It is just the information that's required these days. It's what you have to do to get a loan. And maybe it's where we are with the economy, but the good old days of just picking up the phone typically are not there anymore, and certainly not there with a startup business. And then finally, find the right lender for your needs. We were discussing at lunch a particular industry, and find a lender that knows your business or that's interested in your business that will become a partner with you. So that's the last tip for finding a small business friendly lender. Now, all the lenders in the room know the C's. Sometimes they're the 3 C's, sometimes they're the 5 C's. I picked the 4 C's today of lending: character, collateral, capacity, and capital. And sometimes, like I said, there's more than that. But these are the basics that we're all looking for. Character, in addition to what you normally think of as character, it includes credit ratings of both the company and the principal owners that ensure that the borrower has a history of prompt payment. And a lender will be interested in the history of an owner-operator to see whether they have similar business experience or whether they have experience with that business. And And then collateral includes asset pledged on the loans. It can include a general security interest in assets to the borrower, so it can include a general security interest in accounts receivable or inventory, in addition to things like CDs, marketable securities, or whatever the collateral is, equipment. And then the personal guarantees of the owners and the principals. And then capacity or cash flow. Lenders want to make sure that the borrower has the cash flow necessary to make payments. A reporter from one of the local papers was asking me, I guess in the summer months, he said, I understand that lending is constricted, and I said, we're willing to make loans, but we just want to make sure that the borrower has the ability to pay it back. And so that's what a lender wants to see, is that there's some cash flow to make the payments. And then finally capital, and that's cushion for startup losses or unexpected losses in the future. And again, that's where I know as a new bank, that's what we had, is we had the capital to sustain us through both the startup loss and the unexpected losses. Another tool that small businesses, community banks can provide to startup businesses is cash management tools. And so really, no matter what kind of business you're in, you should make sure that you're fully utilizing all the cash management tools that are out there. This is not even an exhaustive list of all the cash management tools that you can utilize, which will maximize cash flow. That means that make sure that the cash flow comes into you quickly, and that if you have excess cash flow, that it's invested appropriately. All those tools are out there, and I think it's a way that bankers can be friends and not foes of entrepreneurs. So, I vote friends. You may say foes after something that I've said, but banks, will make startup loans as long as there is sufficient collateral and cash flow. Bankers can consult with startup businesses to help them determine their options. We've got a business that's not too old, and they have the opportunity to significantly grow their business right now. And we're working with them. They need a particular kind of SBA loan. And we're working with them and making sure that they're getting that type of loan. And they wouldn't know. I mean, that's not their expertise. But they've come to us, and one of our small business lenders is making sure that we're putting them in the right product to help them grow their business, because it's a significant opportunity for them. But they need our expertise, and we're willing to help them like that. We're also willing to say, maybe this is an area that's not great for you. And so we're consultative in nature, and community banks typically are. And then again, banks have deposit and cash management products to assist startup businesses with maximizing their cash flow.